Hi, and welcome to another episode. Today's topic is worthy bonds. I discovered them because there were literally a bunch of ads coming on my Facebook, and that piqued my interest in terms of what is this. And obviously, just like any ad, eventually you had it enough and you're like, okay, I'm gonna click it. As soon as I click on the ad, and I was basically discovered that they were paying you 5% interest, and I was like, okay, cool. Let's see what is this all about. So, have you guys heard of them? I think they're very new. Their entire I just invested $100. They're still pending, but this is their website. You're worthy of better return. So basically, you put in $10. So every $10 they give you 5% interest rate. So that's the minimum to invest. They do have app, Android and Apple. And here are they are saying, hey, as seen on TV kind of thing, Forbes, Business Wire, and here's how they are investing your money, or how they you basically, number one, worthy bond investor like you. So in this case, me, go ahead and take my money, hard-earned money, right, that I have earned. I put in worthy bond seller. This is not really bond, not like junk bond or government bond per se, but this is like a, they're calling it bond, but this is more like a security that you're buying. But even the security itself is, bond itself is a security. I'll cover that in another topic. What is the security? But basically, security is I owe you. In this case, you buy the bond, so that's you, and then whatever $10 income is. So if you spend $100, you would get 10 stocks. Let's say 10 quantities of their stock, bond, worthy bond. They turn around and then they worthy loan money from bond sales. So their whole concept is they're gonna want to have real asset whoever they in lending that money to on your behalf. But that's not the only thing they do. After doing some research, that's about 30% of their business, but they do lend out other ways, FYI. Business borrows, right? And then in turn, they give you 5% a return, and then you can reinvest that investment again, or you can withdraw it. A lot of YouTubers, they showed me how they did it, so that's kind of how it works. And so here's $10 minimum, 5% interest rate. Watch the interest go daily, and open to all U.S. residents and bank accounts. So if you're overseas at this point, I guess this they don't. It's not available to you. Cash in bond at any time without paying any fees. Basically, you don't have to pay fees to take out your money. Simple way to diversify your portfolio. I wouldn't put a lot of money, but a couple hundred here and there, maybe 500, even up to 5,000 or 10,000 is fine, but no more than that, because they are not really being traded on stock exchange. So they're not being really regulated as much. So like FCC, right, or Securities and Exchange Commission. So they might have a little different rule, and I don't know how they might be, but how might what's going on be underneath them. So welcome to basically less worthy. So this is how they are. We only make the worthiest loan with our bond. So they have one, two, three, four steps that if people or business wants to borrow money, anybody. So less worthy, partially worthy, almost worthy, and worthy. They only do it to the worthy people. Um, Become an investor, little less $10. Skip the bank. The finance Democrats is solid return anytime. So this is more like a fintech type of deal in terms of Silicon Valley type of people, where they have Silicon Valley people, meaning people like me who have technical know-how, and business people got together and they made an app or technology platform, so that us as a general investor, or anybody, you as a general investor, can go ahead and invest in. This is not really backed by major corporation or anything, okay? And they have little FAQ, security exchange commission, register 36 month 5%. Do read that. Is anyone buy them? It's yes. They're accredited and non-accredited investor open to. You have to be over 18 to buy their bond. You can buy many bonds as you like. How do I get my money back? Right, bonds are 36-month term, but you can cash out at any time without penalty. So that's very important part. Never pay penalty to just take out your own money. It's kind of dumb, but some places you have no choice but to put it. For example, if you put your money in 401k and you withdraw it before you are 59 and a half, you have to pay 10% penalty fees, and obviously on top of that you have to pay taxes, which is stupid. I think it's just the tax. No, penalty fees and tax, yes, both. How liquid are worthy one? You can take it any time. No penalties or fees. Just click on withdrawal button. Interest and compound interest rate at 5% annual rate. So as soon as you reach at least a penny in earned interest. What if the stock market goes down? Well, like I said, they're not tied to stock market. They're more tied to businesses. So it's a little bit less volatile. But here's something to think about, in my opinion. If a stock market is what a stock market is all of the businesses that traded public. So if they're doing really bad, what do you think they are doing? I mean, they're not as highly correlated, but they are tied to businesses, because in order for businesses to operate, right, the economy has to go good. And if the stock market is not doing good and no business wants to borrow any money to invest, then how are they gonna pay you? So absolutely nothing. I think that's a little misleading. Bonds are not correlated, but as you know, business, like for example, my family owns restaurants, right? Even though we are not publicly traded company, right? Like you would see Pizza Hut, Domino's, Papa John, those are public traded, but people who franchise them, I mean, ours is not franchise, it's our own concept, but just like any economy, we are cool. If economy is not doing well right now, we are in COVID-19. I mean, economy is not doing that well. People don't want to eat out as much often, and there are a lot of scarcity. People are losing their job left and right. So that shows on the stock market, even though they're not saying here. But who are you lending your money to, right? Think about that. Who are they gonna lend your money that they're taking out? Nobody, literally. So how are they gonna pay you 5%? Okay, so think about that. Even the stock or their investment go down, where the one is still strong, given 5% return. All right. If you look at more FAQ, they have a little bit more, but I think that's enough. Let's look at their account. Here's my $100. To sign up is very straightforward. You just link your bank account. You put in your social and first name, last name, and your address, and then here's the $10. I actually did it last week, but it's still pending transaction. Excuse me. Portfolio value is 0, total asset 0, because this is still pending. With the $100, they have given me 10 number of their share, and I don't have a recurring investment. They do have another feature, which is connect and monitor your autopilot. That's to round off. I don't want to do that because I strictly use Acorn at this point to do my round off. All right, there's another very interesting feature that I kind of like. I wish a lot of other company did that, which is their where is it, interest report. This report is very simple to use. You can look at your yearly. It tells you how much interest you're gonna be earning, monthly, weekly, daily, right? It's just, this is very simple to look at your what you are earning day by day, week by week, month by month, year by year. I wish a lot of other company did that. So that's that, and you can actually Google, right? Is worthy the capital is it? So obviously is people gonna say is legit or not based on their own information, but Dough Roller, a website, says yeah, they're giving them 5 stars, so it is other. But what I do think that you should read is the this Reddit part, because sometimes people like to put really um, really idea to the very left or idea to the very right. So you wanna get much perspective of people's fear and confidence much as possible. I watch a lot of YouTube and they've been around for another last 3-4 years, so I feel confident investing at this point. That's because if $100 goes anywhere, I don't care. Even if I were to, let's say, put in $500, 1,000 to 5,000, but no more than that. That much is my risk. So understand your risk and how much you're willing. So I'll give you an example. When Bitcoin was going really well, I invested in a company called BitConnect. Okay, I had about me and my friend we got together. We bought the about 10-15K, I think. But obviously, as you know, the company was a scam. They had very nice UI and everybody. It was basically tier system where the investor just took the Bitcoin and then they ran away. And their system was they would go ahead and get your Bitcoin, and they would do a day trading with the Bitcoin, and whatever the money they made, they kept certain percent, and they would give you certain percentage. That was their whole basis. But actually, in reality, that's not how they work. They were actually just getting people in, and they were just paying old people off. And there was a lot of YouTube, a lot of people say it was worked, and they were really successful for 2 years until I guess they got really really big, and then they took the money. And you can look at some YouTube videos, some is still there. Man, they did one of their, like, in Singapore, I believe they spent like millions of dollars to kind of do marketing and stuff. So there are companies like that. I don't know if they were Securities and Exchange Commission did anything. I'm pretty sure those guys are on a run, but I'm not saying Worthy Capital is like that. But the lesson that I learned is that only put in money in a companies like these that you are comfortable with, and it turns out to be scam. It's fine, but don't put more than that. If you want to put in more than that, put in a stock market. If even in stock market you're not comfortable, then maybe put in bond, right, or security, but based on your risk. So stock market a little bit more, right? Unless a company goes bust, then you have a problem. Other than that, based on people's emotional intelligence, because certain companies are, like example is AMD. When I was in college, AMD was like $2. And then by the time Bitcoin came around, Bitcoin was always there, but as Bitcoin went, and so it did the AMD price of the graphics card, and now they're like just is ridiculous from $2 to how they went straight up. And that was a legit company, and at one point I thought they were just gonna go out of business. So yeah, that's kind of what I have. All right, guys, let me know what you think about Worthy Bond, and if it's a scam, is it legit, and should I continue to invest and should I not? What is your take on it? Thank you, and as always, subscribe and share, and thank you.